remember, the key with any indicator, signal, or crypto trading software is to look for confluence. Confluence is when there's more than one indicator that's telling you the same story. And in an ideal world, I don't get into a trade unless there are at least 3 or 4 signals that are all in confluence, meaning they're all saying the same things. Hey there, today I'm going to go through all my free trading signals, indicators, and the effects that I use on my TradingView charts as a trader so that I can get a better idea of what's going on in the markets and when to get in and out of trades. So let's hop into TradingView and I'll show you the signals I like to watch. So this is TradingView, and you can get a TradingView.com account for free, but the premium account will allow you to have more signals in place. And this is what I like to use to be able to understand what's happening in the markets. So we can see the Bitcoin chart here, and you can see all of the different trading signals or symbols that I like to watch, and you just click on this and it opens up the chart. So what I'm going to do is kind of walk through. Let me just remove any of the drawings I have here. So this is basically a blank TradingView screen. These down here wouldn't even be here if it was just coming right out of the package on TradingView. And what TradingView allows you to do is you can click on this little effects here, and you can search out different indicators and strategies that allow you to overlay data on the chart to help you better understand what's happening within the marketplace. So I have 6 or 8 indicators that I use as a way to understand when to get in and out of trades, and I'm going to walk you through what each of those are. So the first one is called Calvin Moving Averages. And so in order to find this, you just go to Calvin Moving Averages. You would just click on this and it would add it on here. And I'll go ahead and turn this on. And what it does is it overlays some moving averages and data points on top of the chart. So I'm just going to read kind of from the official text. This was an indicator that was created by CoinBook. I think the guy that wrote it, his name is Calvin Waite, and he used to run this project called CoinBook, which was a series of YouTube channels that taught people how to trade the markets. And here's some of them. Those videos are still up, but he actually, I believe his algorithms that he was using to teach people how to trade were acquired, if I understand the story correctly, by HumblePay. And HumblePay is an interesting platform that allows you to basically buy into the markets using algorithm-driven portfolios. So you can go to humblepay.com to learn about that. This wasn't available in the United States, but it looks like maybe it is now based on this press release. So I would just go to humblepay.com and see if it's available in your area. But pretty interesting idea. You can basically buy a bucket of cryptocurrencies, based on these different algorithms, and it'll show you over time kind of how well each of these different block portfolios has done. Anyhow, the guy that I believe is now working for Humble created this indicator, and what this indicator does is it basically creates moving average lines on the 50-day, 100-day, and 200-day. And I'll jump back in over here, and basically it gives a colorized grid where when a coin price action moves below the 50-day, it goes out of green. When it goes above the 50-day, it goes into green. And so what this indicator showcases is that when you're leaving green, that would be, if you're gap trading, that would be an ideal time to maybe get out of your position. So you can see if we had gotten out right here, there really hasn't been, maybe we would have gotten back in here and ridden a little bit up here and then gotten out. But you can see if we'd followed these indicators, we oftentimes are going to miss a lot of the falling price action. And then now we're back over the 50-day, this could be an interesting time to get back in. Although once the rolling average is over it for a certain number of days, I think the screen turns green again. I'm not 100% sure. I'll put the link to this in the description, and you can tell me what you find. But what I like to do with all these indicators is back test them and kind of see how accurate have they been over time. So you can see with this one, if we had bought in right when it gave us the green signal, we click this ruler here. Let's say we bought in right when it turned green, and then we got out right when it left green. That would have been a nice 375% gain, and we wouldn't have given up this loss here. If we just kept hodling, we ended up, taking a 50% loss. Now, of course, we're up a little bit, and so we're only down 20% from highs or so. But this is an interesting indicator that showcases ideal times to get in and out of the market. Now, of course, it's not always going to be accurate, and that's why I always look for confluence. So I'm looking for 3 or 4 different indicators that all tell me the same story, that all tell me that now's the time to get in or out of a trade. So that's the Calvin moving averages, and I'll put the link in the description. The next one that I want to talk about, so you can always click this little arrow here in TradingView, and you can turn these indicators on and off. The next one that is pretty cool is called VPVR, and that is, I made some notes here. The volume profile is an indicator that displays trading activity over a specific time period at each price level. So we'll get into the volume indicator for time frame, but this VPVR indicator, which I believe is only available if you have a premium account at TradingView, what it does is it showcases how many sell orders, which is the yellow, or buy orders, which is the blue, have existed at a particular price point. And so you can see where there have been a lot of selling and buying, that usually indicates a layer of support or resistance. And so we can use this as an area of confluence to help understand the story that the price action is telling us. And as we drill into different time frames, so if we went to the 4-hour, this is going to adjust to the time frame that we're showing. And you can see where the most price action is at is kind of where, Bitcoin has historically jumped. And then if we fall below this level, there's not a whole lot of support here until we get down to the 35,000 range. And then there's some more support from back here. So again, this is not a definitive get in or out. It's definitely going to be support or resistance, but it's another area of confluence that you can be looking for. And that's called the volume profile indicator, I believe, VPVR. And again, you can, if you just go to FX and type in VPVR, I believe that visible range is the one that you want to click on, but you could try some of these other ones. The one that I use is a premium one that you can get with a paid TradingView account. Anyhow, this is just another way to be able to figure out where support levels are. And this red line here is called the point of control. And so the point of control is basically based on this time frame. I'm going to butcher the exact meaning of this, but I like to use it as, okay, this is a likely place for support where there's likely going to be some buy and or sell orders. So if price action is above the point of control, then if the price action fell, it's likely that this could create a point of support, and it could bounce off of this. If the point of control is above the price action, then that point of control is going to act as resistance. And so just something to keep in mind as you're looking at your trades. Next up, I like to have the golden cross and death cross on the chart. So if we go back to the 1 day, I'm usually gap trading over several weeks right now. And so I usually stay on the 1 day and the weekly time frame. Basically, if we turn back the moving averages back on real quick, what a death cross is when this death cross is indicating that the 50-day has moved through the 200-day. And so that creates a death cross. And so we can go back and back test and see historically what does Bitcoin do when there's a death cross. Here's a golden cross is when the opposite happens. So when the 50-day moves up through the 200-day, which we're about to do, you can see that's called a golden cross. So what this indicator does is it just calls out when those moving averages crosses happen, so that it's a little bit easier to just eye them as an area of confluence. So if we go down to one of these golden crosses, I mean, obviously after this golden cross, we had a big run up. That's not always the case. But after this golden cross, there was a runoff. After this death cross, there was a little bit of a sell off. Let's see if we can drill into it a little bit more. We had this death cross here, and there was a little bit of a sell off. We had this death cross here, and it actually ran up. So again, these indicators are not definitive of anything. It's just interesting data that we can look at as we're assessing confluence and trying to tell the story of what the price action is going to do. So I'll turn that one off. I'll bring us back to our current price action over here. And next up, we have the daily volume. So this indicator down here is showing us how many people are engaging with this coin, and is the majority of the engagement selling or buying. So green indicates that there's more people buying than selling, and red indicates that there's more people selling than buying. In an ideal world, as price action goes up, we want to see volume going up too. So you can see right here, as we started to rise, what's happening? The volume is rising as well. And so that creates confluence that this is a strong trend. And so this is just another piece of data that we can analyze as we're deciding when we want to get in and out of trades. And again, where this volume is the daily volume, so it's volume based on the time period, this VPVR is volume based on price action. So at each price level, how much volume was there. So these are similar indicators, except this one is for price action and this one is for time period. Okay, so next, I like to have the weekly and monthly close indicated. And this red line right here is the weekly close, and this purple line is the monthly close. And so the reason that that's important is that, those are just things that other traders are looking for, and they can offer resistance or support. It's just another piece of data and another area of influence on the price action that we can look to see, is this providing some kind of support? Is it providing resistance? Are there going to be a bunch of sell orders at the weekly close price, once we hit it? Traders tend to use different signals like this to set limit orders, and price action goes up until it hits a big old batch of limit orders, and then price action falls, and then there's capitulation, which is where somebody sees the selling and then they sell, and then the whole herd is selling. And so that's kind of what happened, in this area the other day. So having the monthly weekly close, and again, to get this, you would just type in monthly, or no, you type in weekly, monthly. Maybe you need to take these spaces out. Weekly, monthly close, and you just click on that, and it would add it into the chart so that you always know where the weekly and the monthly close are. So you can see right now let's see if I can. So if we look at the price action now, we've kind of, the monthly close price is acting somewhat as resistance for us. So that's just another piece of data as we're trying to tell the story of where the price is going to go that we can use to make smart trades. Now, the next one is just the SMA. So I have the 20-week SMA and the 21-week SMA. And this tends to be a big support line for Bitcoin. You've probably heard Benjamin Cohen talk about this. If price action is above this area, then things tend to be a little bit bullish. As soon as we drop below this, then things get very bearish. And so it's nice to have this charted so that you can understand how other traders are thinking about the market. Are we above this and feeling bullish? Or are we below this and feeling bearish? So when we turn all of these indicators on at once, all of a sudden a story starts to appear where we can start to maybe notice patterns and start to make decisions about the trades that we want to make. So you can see right now price action is under the point of control. We've got a lot of buying, selling volume at this price level. So this is going to be an area of resistance as we're going through it. Because remember, once we fall through support, on the way back up, it becomes resistance. You can see the 50-day moving average is providing a little bit of a bounce here. And so we can just be cognizant of that. After this flash crash, you can see we bounced on, I believe this is the 20-week moving average. And then down here, I've got the RSI. Now, the RSI, again, I'll probably butcher it, but I would just suggest learning to look things up in Investopedia. Anytime you hear a trader talking about a term that you don't understand, you can go to investopedia.com, click on the little magnifying glass here, and just type in the search term, and you'll find different definitions for the terms that are being used. So the relative strength index is a popular momentum oscillator. Basically what it's doing is it's telling us how many people are buying versus selling. And I've got this set up to have a little purple window from 20% to 80%. And a lot of times what happens is when we get into this 80 to 100 range, especially on some of the lower time frames, that can be seen by traders as being oversold, and the RSI kind of needs to cool off, and so price action will fall. Not all the time. Again, that's why we're looking for confluence. We want 3, 4, 5, as many different areas of confluence as possible. And again, confluence is when many of these indicators are all telling the same story. Below that, I've got the histogram. So the histogram, again, is just another indicator of momentum. I'm butchering it, so do your own research on what these things actually are. I can explain it not as well as I can use it as a signal. Anyhow, the MACD histogram helps determine trend changes, and it's somewhat related to the RSI, but we can see this is kind of the 0 point line, and when the histogram is below this line, then price action tends to be a little bit more bearish as it starts to trend upward. So you can see here it started trending upward, and so did price action. Again, we can back test all of this. So let me hide our hide all of this. So here, if we go back on the charts, we can see we were kind of at the 0 point, and the histogram started to trend up, and so did the price action. Here, we kind of topped out on the histogram. It started to trend down, and so did the price action. So, you know, this is looking for these lines here are also indicating divergence. So divergence is when an indicator is saying one thing, but the price action is saying another thing. So this red line is showcasing that the price action is going up, but the histogram is actually going down. And so that showcases that there is divergence, and at some point there may be a correction. So just something to keep in mind. Again, not always the case, but the more indicators that we have telling the same story, the more confident we can be in our trade. And then finally, we have the Stochh RSI here. This is a different calculation of the RSI. And again, you can go to Investopedia and read all about this. I'm not going to be able to explain it to any um, worthiness. However, I do know how to use it pretty well as an indicator. And so a lot of people, we're on the daily chart for Bitcoin right now. A lot of people that, and really when, 15 years ago when I started trading the stock market, the first strategy I ever used was the stock RSI. And basically what you would do is on the daily chart, you would wait for this blue line to move up through the red line. And when that happened, that would be your signal to buy in. So right here, this blue line, back on July 21st, this blue line starts to move through the red line. If we had bought right here, we would have bought at 31,000. And then you can see the Stoke goes all the way up. And when it's riding this red line, when it drops through the red line, that would have been the time to sell. So we would have sold at 42,000. So that would have been, if we had been following that indicator, we would have bought here, we would have sold, maybe right here, and so that would have been a 28% gain. And then we would have missed further gains, and that's why we want to always be looking at a bunch of different indicators. But maybe we wouldn't have. I mean, we kind of dropped back down to these prices. So again, it's all about finding confluence. Now, this particular Stoke RSI has something called Market Master Divergence on it. If you go to FX, Market Mastery Divergence, if you just type that in, you can add that. And that's these little red, blue, and or red, green, and blue arrows. These green are showing a divergence that is positive, so it's somewhat of a buy signal. The blue arrow is showcasing that there's been a pivot in the current momentum, and so we want to pay attention to what's happening. And then the red indicators are showcasing that there's a negative divergence. So the price action and the indicators are doing something that are opposite of each other. So again, these are not right very often, but they are something to keep in mind as we're looking for confluence. So right now, the Stoke RSI on Bitcoin is way oversold. We're down in this 3% range, and so that something that we could infer from that is that since we're oversold, the opportunity is to bounce back up. So we're oversold. You can see that we're kind of bottoming out on the histogram. It looks like the RSI is starting to bottom out a little bit. We're kind of just bounced off the 50-day. We're above the 20 and 21 week SMA. We're right on this resistance line. So if we could get a little bit above the resistance here, basically kind of above the monthly close and some of the buy volume at this price level. So if we could get right above this, then it's likely that we could have another breakout. Not financial advice. I don't know what I'm talking about, but this is how I read these charts. And of course, it's not just for Bitcoin. We can go to any coin and these same indicators are going to tell us a story. So with ADA, we can see that the Calvin indicator was telling us to get in here and to get out here. So this by itself would have made us a loss. And so just keep in mind, these indicators aren't always 100% accurate. But we can see we're above the 50-day moving average. Cardano kind of during the the flash crash, it bounced on that. You can see we're kind of bottoming out on the histogram. The blue line on the Stoke RSI is about to move up through the red line. Remember, that's a lot of people trade off of this. You can see we're bottoming out and kind of starting to curve up on the RSI. And so, there's a lot of indications that we could be seeing a rally. And of course, you can see we are seeing a little bit of a rally. What else do we want to look at? Now, the VPVR here is showcasing that at this level, there's a little bit of resistance. And so we've got the weekly and the monthly close here that's going to provide some resistance. And then one thing that we haven't really spoken about yet is that there are some tools over here that you can drag onto your charts just to give you a better idea of what the market might be doing. So if we, let me just get this chart in a good angle. If we go over here and click on these little lines here and do fib retracement, the way that you pull a fib retracement is from top to bottom. And so we want to go to the market bottom, which was right here. And I'm going to turn these other indicators off so that we can see this a little bit better. But again, you want to use all of this in confluence. So you would want to look at all of these together and see what kind of story they're telling. But this fib indicator here, essentially the Fibonacci numbers, I'm going to butcher it, so go to Investopedia, but it's based on this kind of sequence of numbers that showcases in all kinds of patterns in nature, in the stock market, in any time there's like herd mentality, these numbers tend to show up. And so a lot of traders use the Fibonacci numbers to kind of understand where key areas of resistance and support might be. And so we pull it from the high back in April to the low in, when was that? June of 21. And it shows us all of these different lines. So we've got they're measured in, we call them the 0.236, 0.382, 0.5, 0.618 to 0.65. They call this the golden pocket. And so these are just areas of support and resistance. So you can see right now, we would kind of just back test where everything's at. To figure out kind of how we're moving up, we would draw this. I always get confused here, so let me know if I'm getting this wrong. We would draw so if we want to know where something's going to retrace to, we draw from top to bottom. If we know where something want to know where something might be going, we draw from bottom to current top. Is that right? No, we draw from, bear with me, guys. We draw from current price action to bottom. And is that right? And then we can see if we break out of this area, we would move up to the next line of resistance would be an all-time high, basically. I'm butchering this. I use this indicator less often for predicting where price is going to go up, and more often to predict where something might retrace to. So if we go to, let's go to the 4-hour timeline for Cardano and just kind of, let's look at how we might use this and just back test a few things. So when Cardano started to fall here, we might say, well, I wonder where it's going to fall to. So we would go from our local bottom to our local top and just kind of play around to see what it might look like. We might go all the way down to this local bottom and to this top here. And you can see there was a little bit of a bounce on the 0.5. You can see that this flash crash went almost exactly to the 0.618. So again, these are just other lines that, other pieces of data that we can use for Confluence. And feel free to yell at me in the comments for not knowing how to use that tool very well. But when I'm not under pressure and having to record, I have used that tool to success quite a bit. And in order to access that, you just click here, go to the fib retracement, and then of course you can go to Investopedia and read all about Fibonacci retracements and why people use those. So those are, I believe, all of the core indicators that I'm looking for. And then of course I'm always drawing support lines so that we can understand if we're above or below support. So we just draw, we go over here to our tool. I'll just erase this. We go over here to our tool, we take, one of the bottoms, we look for kind of an area of support where the price action has bounced several times, and we can see, okay, we're bouncing off of this support. So we had one touch, not really a touch here, but it did kind of come down and stayed above that support line. We had a second touch, we kind of had a third touch, we had a fourth touch. And so right here, we touched the fifth time and we fell through. And so a lot of traders would have gotten out of their trade here, and that would have been a smart move because then we had this big flash crash. And so really, until we get back into this old range, we kind of need to draw a new line to see, what's happening. So right now we're on kind of a pretty steep uptrend recovery. If we broke this, then we would want to look at some of the other signals to see, are we just kind of capitulating here and the price action is going to go sideways a little bit, or are we going to fall further? The longer and more touch points on a trend line, the more that it should provide support. So with this one having 4 points of support, it falling through is a stronger indicator than if it had only had this one area of support. Anyhow, it's always nice to go. Let me give Digibyte some love. We'll go look at it. So with Digibyte, I've got a bunch of lines drawn on here, but we can see that the core channel, I'll go back to the daily. Excuse all these lines. So we basically, I've drawn, there's a major resistance line coming down here. If we turn some of our indicators back on, you can see that we're underneath a lot of support. And so that support is going to provide resistance. And then we had this perfect cup and handle here that got rejected and the flash crash. So now there's going to be a lot of resistance on this line around the 0.071 line. And to get back into this range that we were kind of holding short term, we need to get at least above 0.68. And you can see this longer term range here broke on the 26th. And so, we might have gotten out of our trade here and then maybe we would have missed some gains. But when we got back into this channel and then tested the channel for support and it didn't hold, there would have been enough time if we got out of our trade right there to avoid this big flash crash. And we could have, probably saved 15-20%. Anyhow, that was a long way of showcasing all the different tools that I use. I'd love to hear the indicators in TradingView that have been important to you. I'm John Ray with Awaken Entrepreneur. If you have any questions, feel free to ask them in the comments and let me know if you add any of these to your TradingView and if they help you make successful trades. I'm John Ray with Awaken Entrepreneur, and on this channel we talk about local business marketing, crypto, precious metals, and learning how to feel your feelings as a way to become more intuitive and make better choices.